Hello, friends. Welcome, friends. The inflation number of December 2023 is out. So I thought of doing a short video to take you through how the number looks and what the trends are. Now, if I do a combined inflation, the combined inflation number is 5.69%. Now, if you look at the main big ticket items, which has the maximum weight, it is 9.67% cereals and products. Then we have milk products 6.61%. Then we have housing 10.07%. Then we have transportation communication 8.59%. So these are the big ticket items. Then we have also fuel and light 6.84% and vegetable 6.04%. So we will be focusing on these items because these items contributes maximum to the overall inflation. So what we will do is, now if you look at this number is this, and then the biggest number which is contributing to the overall inflation is vegetables, because the vegetable inflation is 27.64%. Then we have got spices 19.69%, pulses and product 20.73%. Oil and fat actually is showing a negative inflation. So if you look at the trend, the inflation actually is kind of going down, whereas spices is kind of steady. Vegetables is up and down. It went down in September, October, November. Was up. Now this month, December, it is kind of it has spiked significantly, 27.64%. So it's a matter of concern. Now, as regards transportation communication, the number has flattened. It's 1.96%. It was higher in December 22. Then slowly the numbers have gone down. Now, if we look at these items and go back in time by 12 months and see how these items were 12 months back. So if you see that the 12 months back, the inflation number was 5.72%, and spices contributed significantly to the inflation, and vegetable was actually showing negative, right? So it's very peculiar, if you look at these numbers, I find very strange how come in last month, in December 22, the vegetable contributed minus 15% of the combined inflation. Now, if this month the number is 27.64%, it doesn't give any correlation. So I don't know why these numbers are so drastically different. Let's go back in time again by 12 months and let's see footwear, cereal products, oil and fats. Basically, the numbers were pretty high and then it had subsided down. And looks like that oil and fat we have done pretty well. The numbers actually have gone down significantly. Pulses and product, let's say go over 12 months back. Pulses and products, the numbers were low. Now it has suddenly gone very high. See, the numbers are picking up. Spices, if you see, go back in time by spices. Yes, the numbers were high, so it has maintained steady inflation. The spices inflation is significant. Even if you go back 12 months back in time and see the numbers are very high. The vegetable is very, very fine, very strange. And then let's look at fuel and light. The fuel and light, yes, the fuel and light numbers were high, and now we have been able to contain fuel and light inflation. Then transport and communication, let's look at this number. Transport and communication, the numbers were high. We are able to contain the inflation. So let's do one more thing. Let's do a combined inflation weighted average. Weighted average means that instead of looking at individual inflation, we will combine them with the weights. So let's see which item is contributing maximum to the overall basis point, which is 569.15, which is the total inflation of this December 20. So we see vegetable is contributing 167 basis point, right? 167 basis point. The maximum contribution, if vegetable inflation was low, this number would have been pulled down by 167 basis point. Then cereal and product 96 basis point. Pulses roughly around 50 basis points. Spices 50 basis point, right? So these are the big ticket items. And oil and fat has pulled down the inflation by 53 basis point, right? So this is how the numbers are looking, right, from the point of view of inflation this month. Now let's look at rural inflation versus urban inflation. So let's look at the rural inflation. Now rural inflation strangely is higher than urban inflation. The rural inflation is 5.93%, and if I do urban inflation is 5.46%. So consistently rural inflation has been higher. So let's look at rural inflation. You'll see that rural inflation has been higher, right? And if I do urban inflation, if you see, urban inflation numbers have been lower. So very strange that our rural economy has been, showing a higher inflation compared to urban inflation, which is a matter of concern. So which item is contributing to higher inflation? Let's look at those items. So for that, I will basically do another session of this particular app, because that will help me to compare both the inflations together. So what I will do is I'll just go here and create another session of this app and then put those side by side. That will give us a better picture. Let's do that. Okay, so it is coming up. Okay, let me just put this in a different session. Okay, just a minute. Let me just pause this video and come back after setting it up. So I'm back. So let's do rural versus urban, right? So this is the same app, same version of the app. So here on the left hand side of the screen, I will do rural, and on the right hand side of the screen, I'll do urban. So I'll just blow both this sheet so that you can see better and all the clutter is removed, and I'll put my face in middle so that's something. So if you look at this, you will find that rural inflation is 5.93%, urban is 5.46%. November it was, the urban was 5.26%, the rural was 5.85%, then the urban was lower. See, consistently urban is lower. You can see the rural is higher. You can see this number. And let's go 12 months back in time and see what the number was. Then it will give a good picture. So you see, even 12 months back, the rural inflation is consistently higher. Look at these numbers, which is very, very strange. I don't know, there is something severely wrong going on. Let's do 24 months back in time and do 24 months back in time. Here you see the numbers were lower. Lower means it was almost at par with urban. A little lower, maybe higher. So in last 24 months, last 2 years, there has been a significant enhancement of rural inflation, which is a matter of great concern, right? Higher, it is much higher. And now let's compare the individual items, rural versus urban, where the inflation is showing higher or whether it is basically almost similar pattern that we are seeing. Like vegetable, if you see, urban is 31.34%, rural is 25.43%. Then we have spices, 19.05%, rural is 20.05%. Then we have pulses and products. So looks like that, the trend is same, right? There is no difference in trend, except for the fact that in housing, the rural inflation, there is no line item as far as housing is concerned, and we have an housing line item here. So that kind of gives a little bit of respite as far as rural is concerned. Otherwise, if you look at the items, the trend is similar, but rural actually is much more heated up from the point of view of inflation compared to urban. Let's look at transport and communication. Transport and communication also, if you see, the rural inflation is higher, urban inflation is lower, right? And which other item? Milk products. Let's look at milk products. See, milk, rural should be much lower, as for inflation. Milk inflation as for rural is higher, right? Look at this compared to urban. And then cereal rural is higher. Clothing clothing is lower compared to urban. Footwear, it is lower. So this is let's do the other thing. Let's do a weighted average, and that will also give us a similar kind of rural weighted average. So which item contributes maximum to the overall index? So 545.66 is the overall basis point as far as urban inflation is concerned. Here vegetable is contributing to 138.2 basis point, and rural 592.89 basis point. Vegetables are contributing to 189.7 basis point, right? Spices 62.3 basis point. Cereals 127.3 basis point. So look at these three items. Cereal has got maximum weight, 12.335% weight as far as rural inflation is concerned. Then we have got 189. So now if you look at urban, the trend is similar, but these items are little subdued from the point of view of rural. Rural, the the impact is much, much higher. The transportation 15.3% as far as urban is concerned, rural is 18.1%. See? So this is the overview as far as inflation is concerned, and so I think that you get a view as to what is going on as far as inflation is concerned as for December 23. So I thought, because the numbers just came up, and I have been able to integrate this in this table as quickly as possible. I thought of doing this just to get a view as to and just to give you a view as to how the numbers looks. It is it's a matter of concern. The inflation is not slowing down. And if you recall, I did a RBI survey also. It also points in the same direction. Though the economy is picking up and the stock market is also picking up, but from an inflation point of view, our numbers are pretty high. So that should be a matter of concern, and the government should seriously look into this and see how to contain inflation. Because if inflation is not contained, what happens is that the perception of the people around us who drive the economic activity and the economic behavior in the market also get influenced. So the perception about higher inflation is much more toxic to the economy than real inflation. So that's why it is very important to contain real inflation, so that the perception of inflation in the market is also mellowed down, so that the economic activities, as far as the behavioral aspect of the economy from the price increase point of view, can also be controlled. Otherwise, you will continuously have people raising prices, asking for more salaries, because they have a perception that the inflation is going to be higher, and therefore they will need better cash in order to somehow contain the devaluation of money. Okay, friends. So thanks for your patient listening, and I'll come back next time with the next video. Thank you very much.